Solar panels. Let's go over some myths and the truths on obtaining a mortgage on a property with solar panels and what the appraiser can and cannot include. Okay, so now let's get into it. So, there is a solar company that offices right next to me, and I hear once a week their sales training classes, and I cringe when I hear them go over the scripts to tell the clients that solar panels will increase the value of their property by at least the cost of the panels. The truth, solar panels are an amenity that might add marketability to the property, but it doesn't give you a set amount of value when it comes to their appraised value. As a matter of fact, I haven't seen any value for solar panels on the appraisals completed in our local area. In speaking with some appraisers, they view them as personal property and in most cases say there isn't enough solar panels in the subject property area to give any value. You have to remember that when an appraiser is completing an appraisal, they are looking for similar properties in the subject area that meet square footage, style of home, and upgrades, etc that have sold within the last several months. Chances are that there aren't enough homes meeting all the criteria and have 3 to 4 comps that sold with solar panels too. Let's go over some of the guidelines that we have to follow as mortgage lenders and appraisers are required to follow too. Fannie and Freddie Mac on the conventional loan, their guidelines state that solar panels can be included in the appraised value if they are owned without financing. Owned solar panels that are financed as a fixture to real estate can be included in the appraised value only if the panels will not be repossessed for default. If leased, a copy of the lease agreement or power contract must be obtained. Financed as fixtures to real estate, both solar panels and subject listed as collateral must be included in the CLTV. The lien must be subordinated. Solar endorsements may not be used in place of a subordination agreement. FHA says when any type of solar system are present, they must be identified by the appraiser in the appraisal report. The appraiser must not include the value of leased mechanical systems in the value. VA says the value of a solar energy system must be based on real estate market data. Only owned systems may be given value. I hear all the time from clients and sometimes agents that the house has solar panels with a lease or a lien on it, and that the appraisal should reflect higher for this. That is not the case. As I mentioned earlier, if the solar is not paid in full, then appraiser is not to give any value. And the ones I have had that were paid in full, there weren't enough comps in the area for appraiser to adjust and give the value. My advice as a mortgage loan officer is if you are planning on selling your home in the next 5 to 7 years, then financing or leasing solar is not a good idea, as you will most likely not get your money out of the cost you are spending to purchase them. And yes, you may get some tax credits, but that lien or lease is still out there, and the new buyer has to assume that loan and qualify for the extra payment, or you have to pay it in full before or at closing, which means less proceeds. Next, you might want to watch this video where I discuss the pros and cons of solar panels.